Welcome to FutureX, the podcast where we look to solve the variable that is the future of Web3. Every week, we'll talk with some of the brightest minds in the blockchain and Web3 space, from top investors to founders and builders, paving the way for a decentralized world. So what is the future of blockchain? What will Web3 look like in 2050? Let's explore together.
All right, welcome everyone to FutureX, SynFutures panel discussion series about Web3, blockchain, and the futures of finance. I'm Rachel Lind from SynFutures, next generation DeFi protocol and Amazons of derivatives for you to trade and list anything, anytime. So today we're very excited to have industry leaders discussing about the recent market turmoil and the stance of our market today. Welcome Paul, partner from Pantera, and Colin, founders of WuBlockchain. Welcome.
Thank you very much for having me.
Thank you, Rachel.
Thank you. Thank you. Thank you for taking the time. Before we start the discussion, I think that could we learn a little bit more about yourself, your journey into crypto. Paul, I think we all know that you started your career from the legal side and then later on traditional VCs. And we're curious how did you decide to join Pantera at the first place? And what changes have you seen, throughout all those years of investments?
Yeah, I can definitely talk about my journey into crypto and blockchain and why I decided to get into this space, and why Pantera specifically, and what's sort of changed along the way. Obviously, there's a lot of things that have happened, a lot of detail, but I'll kind of start high level, and you guys can dive in as much as you guys want. But I similar to you and some other folks, I started off my career on the finance side of things. I used to be an economic consultant. I was helping to do research and financial analysis and modeling for litigation cases for Fortune 500 companies. So doing all of the legwork to help support the analysis and the cases underneath all of these different Fortune 500 companies, and really sort of, supporting the expert witnesses, I guess, if you ever sort of run into any of these cases, and did that for a little bit of time. But, after being in that industry for a little bit, decided that it wasn't innovative, it wasn't fast moving for me, and I needed to get into the startup world. So I joined an early stage startup doing business development and growth. This was when daily deals was really hot, and this was a sort of a kayak.com for daily deals. The company was called Urban Spoils. They did that for a little bit of time. And then as I was getting excited about working in a startup, I came across venture capital, and I joined a small fund focused on mobile, doing venture capital into just the mobile space, looking at mobile apps and mobile infrastructure. So that kind of helped me build up the knowledge of how venture capital works, and also helped me deep dive into one specific sector. So I've had a history of looking at just one sector and specializing it, and I did that for a couple of years. But as I was looking for new spaces to explore, I came across Bitcoin, and at first I dismissed it. I thought, what is this internet money? And the way that you get it is mostly through mining, and all of these hardware chips and mining farms. This looks like it probably isn't the future of finance. But the more that I kept reading about it, the more that I read the white paper, I kind of just fell down the rabbit hole, and I felt like there was something here, especially in emerging markets, where everything from their own currency to how sort of unstable these governments are, and inflation, and of course the difficulty with actually transactions. Felt like there was an opportunity to really disrupt finance in these emerging markets and payments. So as I was looking around, I wanted to stay on the investing side, so I decided to look around. And at the time, no one was really investing into cryptocurrencies and blockchain. But Dan and Pantera was starting to do investing. And for me, I mean, if you're really going to make a disruption in this space, you need to be able to have the capital to do so. And to be able to do this really early on, you need to be able to have the credibility. And Dan, what he's done at Tiger Management and being such an early pioneer in the space, had the credibility to be able to raise capital. And so I felt like with his global macro experience, which has even been more helpful than ever right now, partnered up with his institutional fund management experience and my venture capital experience, together we can really build a generational firm that would be deploying capital into the best companies. So that's kind of why I joined Pantera, and maybe I'll stop there. I can tell you a little bit more about how things have changed, but obviously I've said a lot already.
Sure, thanks for the story behind. And also, Colin, could you also give an intro of yourself and your interest in the space?
Okay, thank you, Rachel. Yeah, I work as a journalist since 2011, maybe 4 or 5 years. And then I worked to responsible for the PR and the GR in the Bitman, and then just left the company and start a small Chinese media. Yeah, its name is WuBlockchain, and
I'm a big fan.
the most of our readers are Chinese. Yeah, so but in 2020 we translate some of our news in English. So maybe a small readers in English word too. So yeah, that's all. That's all my journey. Yeah, we will focus on the Chinese community, but we have found that the news in Chinese community and in the global community, they focus the most things they focus are the same. So sometimes we will do more English news in Twitter, in Telegram, and some other channels. Yeah.
Yeah, you're being modest. I'm also a fan of WuBlockchain. And yeah, Colin's been saying that he's also excited to have Paul here and have tons of questions also for Paul. Probably Colin, yeah. So I give the stage to you, and then if you have anything to discuss.
Sorry, your question.
Yeah, I mean, like, so I understand that you have lots of questions for Paul,
Yeah.
and why not? I mean, like, take the chance, and also, I mean, let's have a nice chat together with Paul. Yeah.
Okay. So I will ask the first. Okay. Actually, I think as a reporter, our readers the most they care about the question is the maybe the trend in the next 6 months. Yeah, as we know, the Nasdaq, the Federal Reserves is more connected to the crypto world. So actually, I want to ask both of you, Paul and Rachel, for your institution or individual, what do you think the macroeconomic impact on the crypto currency in the next 6 months? And for yourself, when will you buy the dip? So Paul, can you give us some explanation?
Yeah, no, thank you, Colin. And again, I'm so surprised, just how many different channels that the Chinese community is so excited about hearing different news, whether it's Telegram or it's it's mind blowing, how excited they are to really ingest what's going on out in the in the ecosystem, in the media, so. On the topic of the global macro and its effect on crypto and blockchain and prices and innovation. So, I think for us, like, I guess going a little bit back to what we've seen that's been a bit different, a bit more recently than before, during the last bull market, it was really driven by retail, ICOs and people having a bit more of a democratic access to different token projects and tokens. This time around, especially since during the last bull market, it's really shifted more towards aligning investors with the entrepreneurs. So my colleague Lauren did a pretty good study today that she released around vesting schedules. There's really more and more alignment now with the entrepreneurs in terms of vesting and having long-term partners. And what's also happened is more and more institutional capital has come into the space. Even looking at our new venture capital fund, 1.3 billion, we have endowments and pension funds and just, a lot more institutional capital than we've ever had before. And obviously Rachel can tell you a little bit more about, what she's seeing on that side too. So for us, we actually didn't see before this year a dip of this much. And, we sort of saw dips happening, but mostly because of, people taking profits. It's natural that people take profits, institutions take profits over time. But, since the last market had quite a bit of institutional capital, we probably saw or probably thought it would be maybe 20 to 30% dips versus maybe 70, 75% dip like the last market. But, I think never before have we seen both a recession paired up with, a bit of a sort of profit taking for crypto. And, it really just started with the war early this year. And then, of course, now sort of the Fed increasing rates to fight inflation. That paired with, a bit of a pullback has sort of brought, prices where they are. And, our feeling is that, a lot of this is going to be tied to, the Fed and global macro even going forward. But, we do feel like there's been sort of enough of the pain sort of priced in addition to looking for a catalyst to kind of get us out. We're all hoping that it's not going to be the Bitcoin halving because that's a little bit away. But, I think the Ethereum merge that's happening sometime soon might actually be the impetus for us to hopefully decouple from the global macro a little bit, in addition to, of course, people already sort of pricing in, what's going to happen in the near future on global macro, that we wouldn't be surprised if we actually start uptrending and decoupling right now. For instance, Ethereum has gone down as low as sort of the 800 level. We actually feel like, at least for that specific asset class, we have hit bottom for Ethereum, and that, we are going to sort of see it on the rise. And then hopefully the rest of DeFi sort of follows. And then, of course, Bitcoin is going to sort of react as Ethereum reacts. So, a good part of us really feel like we may have already hit the bottom, and that the merge and other things may catalyze us going outwards. Obviously, there's going to be a bit of volatility along the way, but a lot of us feel that we have already hit bottom, and hopefully that we will start, sort of seeing brighter days ahead for pricing.
Okay, thank you. Rachel, so can you share some your insight about this?
Sure. I'm more of a macroeconomic person. I started my career looking at all those macro for quite many years. And I agree with Paul that a lot of the price actions currently closely tied to the Fed's decisions. And I think it's already market consensus that Fed might sort of pass its most aggressive period, given that, number one, the nominal neutral rate right now is the upper band is already hitting the targets at 2.5%, and the inflation price pressure seems to be easing a little bit given the oil pricings coming down, and the recessions concern is out there as well. I think like Fed's balance sheet is very different from that is 10 years ago. That's the US just simply cannot afford that high interest rate for that long periods of time. So yes, on the bright side, I think the worst seems to be already priced in a little, but I think we're still, way from normalizing the inflations, and the market could remain still turmoil for a little while. Just that I think like as what Paul says, that in terms of crypto, there's a lot of capital out there, and there's lots of Web2 ventures and people looking to coming into the space, and so we might got the chance of decoupling or picking up earlier than the general markets. Yeah.
Okay, thank you a lot. I think except the microeconomic in this year, the second important thing people care most is the merge of the Ethereum. Yeah, and the time is now. The developer said it is September. Yeah, it's very close. So, Paul, do you think it will delay again, and also what do you think the impact will it have on the industrial?
Yeah, I do think that I do think that it either will happen or it will be not too long after September. I feel like most of the time they usually give you sort of like a vague time period, and they don't like to sort of commit to a date. But I think this time around, like it seems like there is end at the light of the tunnel, and we do think it likely will happen around that time period. And I think it will be significant. I think it will, further decentralize the protocol, which I think is really cool. Being able to have just much more participation from folks and kind of move away from proof of work. I also think that it'll probably take away a decent amount of Ethereum from the supply, as people will want to stake it and participate, get yield and that sort of thing. And we're seeing protocols like Lido start to get a bunch of traction. And I think in general it'll really just bring a lot more sort of developer interest, a lot more consumer interest to Ethereum, and everything from sort of the layer 2s to even the protocols and DeFi especially, right? I mean, I think right now, DeFi is still predominantly on Ethereum, and it'll drive hopefully more and more people to realize SynFutures is the future of sort of DeFi. And so I think overall, it'll be great for DeFi on Ethereum, and probably consolidate a bit more over there too. And so I think it's going to be monumental for the Ethereum ecosystem.
Paul, you just know,
Okay.
I noted that you mentioned, the merge of Ethereum as part of the catalyst for the decoupling, right? So, in terms of yourself and the funds, are you actually seeing more upside, or allocating more capital into the Ethereum versus Bitcoin? Yeah, interested in that.
Yeah. So that's a good question. So we do, I think right now you can sort of say that the safer assets are Bitcoin and Ethereum, especially as we kind of head and reside in a bear market. And we do trade, across Bitcoin and Ethereum, depending upon sort of what we're seeing in terms of both macro, the percentage split, and also some of the things that are happening on the innovation. And let's just say we're pretty bullish on Ethereum right now.
Okay, thank you. I have another question too, and wants to discuss with Rachel. Yeah, as you know, the many miners, they try to support the Ethereum Classic, or they want to fold the Ethereum, another POW Ethereum. And you know, we do a lot of business with miners before, and you are build a new DeFi project now. So do you think the miner support will successful in the Ethereum Classic, or the another POW Ethereum?
Yeah, I think like for my personal view, first of all, if they would love to like support Ether Classic. I think like with the miners supports and some of the exchanges supports, you could always do that, right? That's the beauties of blockchain, where you could just just fork and also being in a permissionless world, you could definitely do that. But at the same time, I think that whether it will grow to be a very successful ecosystems and develop as what the miners and other supporters believe, I do have some doubts on it. I mean, for one thing, that we all experienced the BCH fork, right? So it's not very easy, even with that much support. And today's support for the Ethers forking is much less than at that time. That's number one. And secondly, I think like it's just lots of questions around how exactly can you fork the Ethers ecosystems, because I mean in the Bitcoin time, Bitcoin is just a Bitcoins, and it has very little applications out there, and it's just mostly used for ledgers and payments. But in the Ethereum ecosystems, there is this vast ecosystem with DeFi, NFTs, gaming out there. If you fork these systems, are you going to for all the projects on that, or like would you be able to convince all of the ecosystems builders to switch to that directions? I do have lots of doubt in this, but but that's always the beauties of the blockchain, and where you could support whatever thesis and philosophies that you believe in.
Yeah. I also have some thoughts, because I think the miners' knowledge is totally different with the developers, because they are very full experience about the chip, about the electricity, and about the hardware. But if you want to build an ecosystem, you need many developers, but they are not really familiar with this. Yeah. Oh, okay. Yeah. I have the next question I want to ask Paul is something I'm also wondering is, as we know, many funds have completed a huge amount of fundraising. Like Pantera also closed a 1 billion blockchain fund, but in the market now, we also see many funds have also wait and stop the investment, because they may be I don't know, maybe they think that now there is already a bear market, and is not a good time to do the invest. So I want to ask will you also wait and see like many other institutions, or also what do you think about the investment market will become active again?
Yeah, so I do think that, maybe compared to the last bear market, we won't see as much of a slowdown. And again, there are more funds than ever that have, raised capital. And most of these funds are still going to be targeting mostly the seed round and Series A rounds, and lots of seed rounds, of course. So that, in addition to just actually seeing a lot of companies that are being started by really high quality founders and talent continuing to enter even during this bear market. We're starting to see a lot of serial entrepreneurs and a lot of Web2 entrepreneurs, guys that have been product managers at Lyft, or guys that have been sort of, executives at different blockchain companies. There's the Coinbase Mafia, there's the Matrix Port Mafia, there's, other people probably leaving, Kraken, Genesis, and actually even some of the larger neobanks, and we've seen a bunch of Revolut people leaving. And so I think they are seeing, especially companies that the TradFi companies that are starting to incorporate crypto, or they have a crypto person or crypto team, starting to really leave and see an opportunity in this bear market, see the problems that have existed during the last bull market around needing more infrastructure and applications around DeFi and consumer, wanting to come in right now, be able to raise capital, be able to build for the next bull market. So I think right now what's happening is there are no growth stage deals being done. And, it's partly because the supply of funds that can do growth stage deals is very small, at least in terms of crypto native funds. There's probably a handful. You have the traditional VC or the sort of like crossover funds that do growth stage, but they're going to be a bit more risk adverse right now. And to do a crypto growth stage is probably going to be just even more outside of their lane. So we're seeing growth slow down, even though the valuations for growth are the first ones to be affected right now. And then, I think what we're seeing is a lot of seed deals and some Series A's and some Series B's. Those are all happening. I'd say that people are being a little bit, waiting on probably the Series A's and Series B deals, thinking that unless you come across a founder that you want to basically just, give $10 to $20 million to right away, a lot of those deals are probably, where valuations just aren't reflective of kind of, where the market is right now. So I would say a lot of folks are really trying to get into the earlier seed deals. Let's just say round size is between $1 to $5 million. And because the upside is going to be there for companies that raise around that sort of sizing and valuation. And I think as we continue to stay in the bear market for a bit of time, as Rachel mentioned, I think there's still going to be some persistence of the bear market and what's going on the global macro side to kind of keep things level. We're going to probably see the Series A's and Series B valuations, especially for founders that aren't sort of like, 3-time exits, like that sort of thing. I think those are going to come down. And then I think we're going to start seeing more and more of the Series A's and Series B deals happen as we kind of move in toward the latter half or to the tail end or the early stages of a bull market. So right now, I guess to kind of finish off that, the view is, what is Pantera doing? We are focusing a lot on seed deals right now, but also being very opportunistic on anything that's outside of seed, but even more active on the public side of things. As Rachel mentioned, Bitcoin, Ethereum, I think there's other opportunities that are down maybe 60, 70, 80% from the highs. And so we are looking to make sure that we take advantage of what's already here, which is the liquid markets, and then be very, very diligent about the private markets. I think for us, as everybody was active during the bull market, you want to make sure that you find the right entrepreneur. You want to find the right space that you're non-conflicted out of. And some of the areas that kind of make more sense during a bear market, which are usually around sort of like DeFi and infrastructure, and maybe a little bit less on consumer, unless they find like the right sort of product market fit, and then, the right sort of value out of it.
Yeah, great. As we know, in maybe in the last bear market, 2017, many good projects without their price funded, like Polkadot, MakerDAO, or many other projects. Yeah, people invest them in a very low price, and they really make money in the 3 years later. Yeah. So
we were the second largest investors in Polkadot, so we know.
Oh, cool. Yeah, one of my friend invested maybe 100 projects in 2017, and he told me only Polkadot make money.
Yeah, right. Yeah.
Okay.
Talking about that, I mean, like, Paul, is there any specific sectors or areas that you're interested in right now? I mean, both in the public market and the private market. Yeah.
Yeah, it really kind of goes back to, I think right now for the bear market, infrastructure. So I think on the public side of things, we are very interested in, I'd say, DeFi. I think that to us makes a lot of sense. And so really probably in the shorter term, companies that actually have proven that they have product market fit. So I'd say, the ones that actually have, volume and TVL and that sort of thing, that would be on one end of the spectrum. And then of course, as we sort of mature into the market starts picking up, then I'd say we probably start going into maybe a little bit more on the application layer. On the private side of things, I think for us, I mean, as this space gets more and more global, I think we're going to start seeing a lot of the same companies in the US that have succeeded and built infrastructure start existing outside. So I think there's still room for innovation, maybe around custody and trading, both on the CFI and DeFi side of things. Maybe things around sort of, KYC and RegTech. I think we sort of foresee that there's probably going to be just more and more of a need to sort of like get more sort of information and maybe more data on customers. So I think, preparing for maybe a little bit more of a regulated world, or being able to sort of, now we're starting to see more institutional investors come into the space. They're going to need more data to make decisions, right? Whether it's for us to figure out like, what tokens right now are undervalued, or maybe even as SynFutures to sort of do competitive analysis. I mean, there's so much data on chain and off chain, and so be able to put it all together and potentially tie it to, credit and all this kind of stuff. I mean, I think that the data piece is going to get even more and more important. Then of course, I think there's going to be lots of different marketplaces that, blockchain can sort of disrupt. And so I think a lot of things that we see in the US really existing in Asia, Southeast Asia. So I think, for instance, like we invested into, we're also interested in consumer too. So, things around like, we invested recently into a company called Optic, which we think is going to be like the chain analysis for NFTs. If NFTs are going to get big, you need to make sure that, of course they have markets and derivative markets, but of course, like knowing which one's real and which one's fake. And so that type of infrastructure, a lot of dev tooling, to really help these use cases push forward. And insurance too. Insurance is huge. We think insurance is going to be another market.
I think also a very hot news in recent days is some new layer ones from the Meta teams, Facebook teams, and they use the Mu programming language. So do you join the investment to these layer ones, or how do you see these new layer ones will also be a good narrative like the maybe the Solana or the other blockchains?
Do you want me to go, or do you want to start first, Rachel?
Yeah, I think like Paul, please, you are the expert.
Okay. Well, I mean, look, I think it's very hard for new layer ones to kind of go out there and make a dent. I do think that there's two ways that they can potentially make a dent. I think there's layer ones out there that are, maybe incorporating some technology to make them a bit more private. And I think there probably is a world for, privacy, especially if you start getting into certain use cases, and especially things around sort of, sensitive data, financial data, things like that. And then I think the other angle at which, folks are attacking is around, the example of SUI and Aptos and, and the move language. And so, that can also work too, I can see, because at the end of the day, I mean, you have to be able to get developers to build on top. Obviously, it's nice to have a network effect and, sort of existing applications, existing users and ecosystem. But at the end of the day, I mean, if you can come up with dev tools or an easier way for people to sort of build, then I think that's one way to do it. I know Near was interesting to us in the early going because they kind of come from more of the Web 2.0 side and really focusing on the dev tool side. And I think with DM and Move, I mean, it really just goes down to how do developers feel about using it. And the developers that I talk to feel a bit excited to, use Move versus Rust or Solidity. And so I think there is something there to possibly make some headway. I think there's still early enough where, at the end of last year, you could say how many developers are building on blockchains. Probably the size of, the number is probably the size of a really large high school. It's still very early, but I think you need to have, something to sort of incentivize developers or certain characteristics that can sort of make certain use cases really sort of thrive. And I think both of those, whether it's privacy or whether it's a better language, can do so. Obviously, like having venture capitalists and capital behind you, in addition to sort of a wide set of investors to kind of help push the ecosystem. I think we're starting to probably get to the tail end of new layer ones that can kind of push forward. But I do think this new set of layer ones has some potential. It's going to be a little bit of an uphill battle. But again, if they can really kind of go out there on top of the technology and sort of really build the awareness and the education and use what other people have done in the past and sort of be sort of like that, me too, I think there is a chance. I guess the way to wrap it up is, does Pantera have any exposure to some of these new layer ones? As a fund, we don't have exposure to these new layer ones. I think for us, knowing that it is going to be an uphill battle, we want to wait a little bit and just kind of see how the ecosystems develop. But similar to some of the other ones like Solana, where we didn't invest early on, once we start seeing enough traction and monitoring a lot of the sort of on-chain data, we'll definitely try to time it right if we see something starting to take off.
Okay, Rachel, how do you think these new layer ones from Facebook, Meta, teams, and you team will want to build your DAPP on these new layer ones? Also another opinion is that we already have many layer ones, but the super DAPP is not so much, and some ones like DYDX, like the XC or the Stefan, they already will build their own chain. So the layer one is too much now.
Yeah, when I hear what Paul said, I feel that like the mentality is very similar. I mean, like here from the builder's perspective, I mean, for one thing, because a builder has to put in lots of resources into developments, kind of like have to either wait and see whether the layer one could pick up first, and secondly, I mean the driver for us will have to be huge. Either, I mean, like the ecosystem has been there and then lots of users there, or they have to actually give lots of incentive for projects to come. So, I mean, like my view is similar in that, I mean, like it's very hard right now for layer ones, simply because I think the Ethereum ecosystems have grown so huge, and people has getting, I mean, used to come over here. That's number number one. And secondly, if you look through the nature or in essence, I mean, like we know about the shortfalls of Ethereum and others. And I mean, in essence, it's always a trade-off. You look for like speeds, look for capacities, throughput, everything. There will always come with the trade-off of decentralizations and the security and others. So at least till now, we haven't seen a major breakthrough to solve the questions, and then you solve one and then you compromise another's, and then it's very hard for us to see a breakthrough. So I also hold the view that unless there is a major breakthrough in the technologies, it would new layer ones would have to pay lots of efforts for new adoptions right now. Yeah.
So they need to pay SynFutures lots of money.
Always open for that, right? I mean, like, drive the users and also like drive the adoptions. Yeah.
Okay. The next thing I want to ask Paul is about Terra. Yeah, like the Pantera is a very important investors in Terra, and according to the news, you are very lucky or you are successful to solve maybe 80% of the lunar, before it collapsed. So can you share something with your experience or your insight of Terra, to our readers?
Yeah, I think for Terra, I mean, the initial thesis was really just, betting on the team at the time, and, sort of what they had done in the past around payments, Daniel with Ticket Monster, and I think that was sort of interesting, sort of a stable coin that actually potentially had the connections to provide utility, which, was more than a research project that we've seen from a lot of other folks. They sort of shifted over to focusing a bit more on DeFi with Mir and Anchor and whatnot. And, I think for Pantera, it was a bit of, just making sure that we sort of manage the risk of the asset. And also, I think luck also factors into any sort of investment too. I think for us, we did not foresee the way that Terra unfolded. It wasn't one of those things where, none of us could sort of predict. And, obviously, even us, I mean, we still lost money. Fortunate, but we still lost money too. And so it's a lesson learned for all of us to really, do obviously, research, manage risk, and, as you sort of like look into future projects. I mean, I think that's why sort of risk control, diversification just kind of fits into it. I think there's going to be just a lot more, especially with what happened there, and then also Celsius and 3AC. I mean, I think everything from just deeper diligence to risk control to transparency, and that's why sort of self-custody and DeFi is really, really cool compared to some of the things that have happened in the past. And at the end of the day, I mean, we all learn, and we'll all push forward as an ecosystem and get better.
Another fact is Terra's fair really caused the Three Arrows fair. I think your fund maybe have some connection or cooperate with Three Arrows or the Suju or the Kyle. What do you think about the Three Arrows and its founder? Actually, I think they are great angel investors in maybe 1 year before, and really have a great reputation in the community, I think. But in the end, it sort they likely lost the control. I don't know. What do you think about this?
Yeah, we know those guys. We actually hadn't done any business with them, not because we didn't think they were smart, just never really sort of, fit with, anything that we sort of needed to do. I think they just took a bit more risk than they should have, and yeah, I don't, that's probably all I can say. I mean, yeah, we hadn't done any business with them, and they seemed smart and credible, and folks make mistakes, and yeah, I mean, the way that it unfolded and afterwards, I mean, the non-transparency and whatnot, at least from what I've seen on the public, is very unfortunate, especially for some of the clients maybe, but outside of that, I'm not really quite sure what else to say.
Yeah, I understand.
Yeah, Colin, I'm actually also very curious. Sorry, Colin. Yeah.
Yeah, Rachel. Yeah. I want also I want to discuss this with you, and as you know, you made the lending business before, and we also worked together. And do you think the Three Arrows is just a bigger Babel Finance before, or yeah, and I'm very surprised the Babel Finance is broke up again. Yeah, this time. What do you think about this?
Yeah, I think that there's already lots of analysis and according to our understandings that they invest into like GBTC, UST, and they borrow a lot of cash, and then the markets goes down and lots of liquidation out there, right? So it's quite similar to what Babel Finance and others, and you could I think that if you're asking about my view on this and why they are crashing again for Babel, I mean, you could always blame all those founders on their bold actions and reckless and lack of risk management, as the industry has been talking about, but the reality is that is part of humanity. I would say that it's also the incentives that would exaggerate and also, I mean, amplify the greedy sides of humanity, right? And this is not only in the crypto industry. If you look at the, because I experienced the '08 financial crisis on the Lehman Brothers failures, and then already back then everyone's been talking about the incentive structures of all those traders. I mean, at one time, I mean, like if you take on lots of risk, you might got a chance to win big bonus and come to fame and everything, but if you just get hits, the downside is just you lost your jobs and then you started another career. So I mean, the asymmetric payoff structures in this, I mean, sort of like tradings and finance industry really, I mean, like is sort of like encouraging people to taking more risks. I mean, if you look at, I mean, Babel Finance, they used to fail, but I mean, like at the end, they just started all over again. And for people talk about basis cash before Pantera. So I mean, like people get used in, especially in the crypto industries, that failure is just okay. You just started another ones, and then but once you take on more risks, it's easy for you to come into, I mean, great fans and wealth and everything. So it is the inherent incentive structure that will ultimately lead to everyone into taking more risk. And I am in the DeFi space and believe in DeFi. But if you ask whether DeFi could solve this problem, I would say that honestly, it is not the ultimate solution. Transparency, of course, could bring lots of, I mean, like good things into the industries, but it is just a means to an end, but not the end itself, right? I mean, like ultimately, for you to solve these types of incentive structures and questions, you still need to rely on certain sort of like regulations. It's not the government regulation per se, even the industry self regulations on that. Say in traditional finance, you have to put aside certain capitals for reserve, and you have some restrictions on what you could do and how you could protect the users. So I would say that as the industry evolve, like certain types of regulation, be it at the authority or the industry self-regulation would emerge. And the transparencies of DeFi and some other like blockchain technique will help the regulations to be in place, and then towards a much more healthy financial systems. Yeah.
Okay, both of you. I think my questions are over. And Rachel, if you have any
I do
questions.
have a question for Paul. I mean, like you talk about Terra 3 arrows. I'm not sure. I mean, like I'm also curious on how you made the decisions to exit Terras. I mean, I read the news on like how you turn into a 1.7 million, right? Investment into 170 for the investors. And normally, actually, how can you walk us through the decision process? How do you decide, and what are the signs that you're looking for, and the stories behind? Yeah.
Yeah, I think it was really, I mean, number one, just fund management around sort of risk. And I think when you see a position that goes up that high and maybe sort of overtaking a bit on sort of the fundamentals and the use cases, maybe not quite being as far along as maybe the rise in price, then you sort of evaluate whether it makes sense to size the position accordingly. And then also just like, knowing sort of where it is in terms of concentration within the entire portfolio, just kind of made us want to just, take a bit of risk off the table along the way. So it was a bit of risk, a bit of just understanding, what type of asset it is and sort of, where it kind of fits in with sort of like the use cases that, it's going after. That's kind of the short of it. But there wasn't any sort of like exact science to it. It's a bit more like, figuring out a valuation of a company, a little bit more art than science.
I see. Then, I mean, like with all these years of market ups and downs, and then are there any like advices that you give to the projects and builders during such market conditions?
Yeah, I mean, you're saying especially during a bear market, right?
Yeah.
Yeah. Well, I can tell you about bull market and bear market, but I think right now during a bear market, it really is the best time to build. You don't have your employees like making a ton of money off of day trading or speculating, and everybody is focused on pushing forward. And sometimes it's it's actually due to necessity. A lot of folks during this bear market, they know that they're because maybe they have some treasury that's in crypto, that the runway is a little bit more crunched. And so now it's really trying to buckle down, build product, trying to get to product market fit, or trying to basically get to profitability. And that means, sort of a focus probably a little bit more on B2B than B2C. And then really trying to figure out other ways to sort of build exposure. I think, podcasts like these are amazing, to really kind of be thought leaders, right? I mean, at the end of the day, whatever you're doing, you want to make sure that you can educate people on what you're doing, because everything that you're doing in blockchain is probably going to be pretty new. And so, I think the education, getting yourself out there, showing people that, what you're doing is meaningful and has significance, I think is extremely important. And really just building the team and the foundation, especially around the product, to basically support the next bull market. If you're an exchange, making sure that you can support sort of the next wave of users that hopefully will come during the next bull market, and making sure that customer support and all of that stuff is sort of up to par. And so I think it's really just, hopefully surviving and turning yourself into a real business, or really preparing yourself so that you can support the next bull market, and making sure that you have the right products that will sort of feed into where the ecosystem is going.
Thanks for that. We will be also get down to earth and build as you mentioned. Thank you. I noted that we're running out of time, and thanks again for Paul for Colin's moderations, and stay tuned for our next episodes. And thanks again. Yeah.
Amazing. Thank you for having me, Rachel and Colin. You guys are amazing hosts, and look forward to seeing what comes next for SynFutures.
Thank you, Rachel and Paul.
Thanks for listening to the FutureX podcast. Subscribe on Spotify or wherever you're listening to this episode.